In the heart of the NASDAQ market, an extraordinary transformation quietly unfolded, one that few investors saw coming. A small electronics firm once known for its wireless audio innovations suddenly rewrote its own identity. That company was WISA Technologies. But on February 14, 2025, it abandoned its old name and emerged with a bold new identity, Datavault AI. For a publicly traded company, a name change is never trivial. Typically, it follows a period of clear strategic repositioning, a stable financial foundation, proven products, and a convincing growth story. Companies usually announce such moves after they have earned the right to rebrand. Datavault AI did the opposite. The new name appeared first, before new revenue streams, before operational proof, before any evidence that its transformation was real. This unusual sequence was the first mystery. The rebranding was not cosmetic. It was an existential statement. The company sought to reposition itself entirely, from a hardware manufacturer into a player in the rapidly expanding world of data tokenization and artificial intelligence. Its new vision was encapsulated in one striking phrase: "We treat data like gold." According to this philosophy, data was no longer just information. It was an asset, measurable, ownable, and tradable. The company promised to build a system that could quantify the economic value of data, secure its ownership rights, and tokenize it through blockchain technology. Tokenization, in this context, means converting real-world assets into digital tokens that can be traded securely and transparently, much like shares of stock. Ordinarily, such a transformation would require collaboration among banks, regulators, and established technology partners. It demands a long road of compliance, integration, and market testing. But Datavault AI claimed it could do it alone. It would develop the entire ecosystem internally: technology, infrastructure, and exchange mechanisms, without relying on the traditional institutional network. This defiance of industry norms was the second mystery. To investors, it raised a haunting question. Was this revolutionary speed or reckless haste? On April 15, 2024, the company executed a 150-to-1 reverse stock split. In corporate finance, reverse splits are generally viewed as distress signals, an attempt to raise a collapsing share price by reducing the number of outstanding shares. They often suggest that management is fighting market perception, not celebrating growth. Yet Datavault AI framed the move as the beginning of a new growth era. This reinterpretation of what is usually a negative event was jarring. It felt less like a restructuring of capital and more like a rebranding of risk. Within months, the company completely pivoted industries, shutting down its legacy audio business and leaping into